If you're trading zero DTE Iron Condors or anything that's super short duration, especially on the SPX, you might be doing it wrong because I've seen a lot of people over the years that I've coached and they don't do it profitably. It might be profitable for a little while, but then you get one big thing that blows up in your face. So in this video, I'm going to share with you a little insight on how to kind of transform that a little bit to shift the risk into different zones and areas and do it better than what most people do or show you online. Anyways, if you don't know me, I'm Sasha, the options coach. I've been working with people one-on-one on trading options. I coach a lot of people from retail investors to hedge fund managers, you name it. We do brainstorming for a lot of different portfolios. With that being said, let me show you the appropriate way to look at zero-day iron condors, or really iron condors in general that you might be looking at. So for a lot of people, what they do is when they're trading an iron condor, and let's just draw it out, they're kind of looking at something along these lines. So if we're looking at a risk profile picture, if the price is over here at around 80, 81, we kind of settle it in the middle, and then we might do 10 contracts in these spots, okay? But the issue with this is that we have a concentration of risk in these spots or zones. We've got 10 contracts allocated right then and there. And when the stock starts to kind of come back on us or go up on us, we start to have a bit of trouble because we've got a lot of concentration in this zone, in this one area. And now you're like, oh man, I got to stop out, or I need to get out of the position. So this is the common problem. And then what people do is then they start tweaking things. Well, maybe I should have done it wider. Maybe I should have done it tighter. There's a lot of different variations, but really when we look at iron condors, at least in the portfolio management side, what we're looking at is spreading risk and capital into different zones and areas. So if we've got price right here, what I want to do next is really lay out, rather than doing 10 contracts in one area, if that price starts to move a little bit, I'm going to layer another iron condor right here. Okay. So now I've got, let's say, 2 contracts in here. And then I've got 2 contracts that I did on the red one. Okay. Then as that price, let's say, heads a little bit higher or starts moving up, I might actually do 2 contracts over here. So now I've got kind of 3 iron condors where I've got 2 contracts, 2 contracts, 2 contracts. And what you're doing with time is you're starting to layer these positions over. That way you can start peeling things off as needed in different zones, different areas, different quadrants, and really starting to modify your risk from one zone or area into different zones and areas. Now, this is creating an array. Obviously, you're dealing with multiple contracts, but the biggest issue I always see is people concentrate the risk in one spot, one area. It's a terrible way to do it. Anyways, hope this helps, gives you a little insight. Thank you so much for joining me. Feel free to check out some of the other videos. If you want some insight on some iron condors or want me to give you some guidance on a few training videos that I have, just let me know and reach out and I'll custom create a little lesson plan or videos, next videos to watch for you. So that way you can continue to evolve yourself a little further. Anyways, take care and I'll hear from you soon.